Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Okay, thank you. How are we doing in Discord? Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Well, good morning, everybody. Thanks for visiting the Trader Lab. I want to remind everyone I'm streaming from Costa Rica, and we are having connection issues here. If there is an issue, I will have to drop the YouTube stream, and it will continue in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. If you are inclined to come and visit the Trader Lab, there's no cost for that. In addition, yesterday's stream we had to drop out. But it is now up on YouTube if you want to watch yesterday. And if this one drops, it'll also be put up there for your dining and dancing pleasure if we have to drop out of YouTube. Just a heads up on that. Thanks for your patience with this. Hopefully, we will be able to resolve this, or at the very least, it'll be straightened out when I return to Chicago. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, everybody, I'm going to give you a couple statistics. I'm going to do the best I can. Remember, if I have to drop out of YouTube, the stream will be posted later on, and you'll be able to review it. In fact, if we do have to drop out of YouTube anytime over the next week or two, the stream will be posted after the fact. So you can review it if you choose. Now, we opened lower inside of yesterday's range. Now, yesterday, you'll notice, FOMC day, we popped outside of this micro composite. They were stopped sitting here. And as you guys remember, we came up on this day and failed to take that high out, which suggested to me lower the following day. However, and there's always the however in this business, yesterday we had a target here at 56.70 quarter. And the market failed to get there. When the market fails to do something, you always have to consider what is the other possibility. And in trading, we don't know what will happen, but we do need to be in a situation where we're always considering what might happen and always be looking at the market from both sides. So, FOMC day, and of course, what happens here, not of course, but naturally what always might happen is we get these guys out. Now, we get these guys out, which is the buy stops above here, and then we come back inside. When this happened, at least at the end of the trading yesterday, I was thinking, well, okay, we got our buy stops out, and we closed back inside. And we closed in this area, which is a balance area from this day. At that point, I was thinking, and I'm just telling you what I think, it doesn't matter. Remember, what I think or you think doesn't matter. It's what the participants in the market say. And our job as traders is to attempt to align with them, not predict what's going to happen. So initially coming in today, I was looking for the return to balance or 56.70 quarter. However, market had a different idea for today. And that's what's important. So let's go take a look at today, how it manifested itself, and also the possibilities and how you might have gotten in alignment with it. Now, again, I want you to know my plan for today was I was looking for continuation of selling, and I didn't get it. So I have a process I follow, and it's come from tire tracks on one's back, which of course, if you've been trading for any length of time, we all have some snow tires, if you know what snow is, run over the back. And for me, I found the way to attempt to stay in alignment is a narrative, and it goes something like this. If this, then that. If not, then what? And the if not, and if not, then what? Well, then what is going to happen next and what aligns with the trade plan for that situation. But here's some statistics. And how we doing in YouTube? Please give a like. And remember, if the stream goes down, I am streaming from Costa Rica, but it will be posted up on YouTube if you want to review it. And also, yesterday's stream, we had a similar situation. I had to drop out of YouTube, but that stream now is posted on YouTube if you want to review it. So, statistically speaking, we opened lower inside of yesterday's range. Now, before the day starts, in the Trader Lab, what we have are tools. Now, you have to vet everything for yourself, but yesterday, what that did is, after yesterday's behavior and then today's open, we start with statistics. Now, the thing that's most important, statistics are only one piece, and they're not the primary piece. The primary piece is the participant behavior and anticipating behavior. Trading is anticipation and preparation, not prediction. So we can all predict, and the thing about prediction is, in trading, it is alignment. It's not about being right. There is no right, there's no wrong. What there is in trading is random outcomes, but if you operate in the business of trading and you understand that it's 100% random 100% of the time as far as any rotation, then it's statistical probabilities and adjusting your trade to the developing fractals or rotations. So the probability of taking out the first hour's high or low, opening lower in range, is almost 98% probability. Taking out either the ETH high or low, 93%. Taking out the previous high or low, and take note of this one, almost 86% probability. Taking out the overnight volume point of control, approximately 83% probability. The overnight mid, 83% probability. The previous close, 72% probability. And the previous point of control, which we'll all look at these levels, 70% probability. Taking out the first hour's high on its own is about a 69% probability. And we can go further, but that's enough. The ETH high is about a 50% probability. So, and past performance, not indicative of future results. These statistics are available to everyone in the Bookmap Discord Trader Lab community, but you have to vet it for yourself, right? Okay, so RTH open. Now let's take a look at some of these levels. ETH low. So considering where we're opening, initially I'm going, okay, we're looking for this. Why? Close. Horseshoes and hand grenades, right? Then let's look at our levels above. Overnight volume point of control. This is the highest volume from the ETH. So that's another potential target. My thinking, doesn't matter my thinking, I'm just saying is my initial plan was go to here, go to there. So much for all that. But let's see how this all plays out. Then we have the overnight mid. Again, I already gave you those statistics. The naked volume point of control, I think it's about 70%-ish. First hour's high, which was not here at the time, of course. That's, I think, about a 69% probability, 85% probability we take out yesterday's high. And none of these are recommendations, and nothing has to happen. And it's not predictive, it is just probabilities, okay? And if you understand the business of trading, really, we're in the business of probabilities, all righty? So let's go. So remember, my idea coming in was potential continuation down to the 56.70 level. However, my first trade was not a short. And there's only one reason I didn't take it, because my plan said, look for a short. The reason I didn't, and it was short to get long. So you understand, so short to get long. The reason I couldn't take it was by the time I got my entry, I'm sitting right on top of this thing. So if it doesn't fit, now for me, and maybe this just comes from some experience, trading 45 years, at some point you just don't get that excited, if you will, about, and compulsion is something over time you learn to manage. If I can't enter well and without enough range, then I tend to just wait. So here's the RTH open. This is developing volume point of control, this yellow line. And what it represents is volume. And in the auction, the idea of an auction, or what this is really built on, and why the market tends to do some of the things it does, is the goal of the market participants, or the behavior of the participants, is to find what's too high and what's too low. Don't you wish you knew? So right here, this is too high. Now it starts at 0. This is very sensitive. And I always say in TraderLab, unless you can trade the broad strokes, you do not trade the open, because that's really gambling more than we typically do when it comes to taking risk. The reason it's high risk is there's no structure. The structure we're leaning on is the ETH structure. So we're trading a little bit of this as it develops, but we're really trading other structure from the previous RTH session and the ETH, which is the last auction. Hope that makes sense. Now, how are we doing, guys? How's the audio in YouTube and the Bookmap Discord Trader Lab? We doing okay over there? And remember, if I have to drop out of YouTube because of technical issues, the stream will continue in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. And also this stream will be posted later in YouTube if you want to take a look. So, and at this point, who knows, right? So, all calm on the Western Front. So right here, open, I see my seller. Now, I see my seller and I'm going, okay, I'm thinking about a short. So my area for the short is here. So I get my seller, I pull back, I see my seller again, I get my VPOC migration, I'm looking at this, and it drops on me. So right here, I could not, and I would have taken this short, I'm just telling you, because I'm going for the statistic. I play statistics, and as far as I know at the time, going south of the border. So here I pull back, and this is my next area to look, right here. And again, fast. So, and I'm thinking, and right here, I'm thinking, well, you should have moved faster. But now my risk needs to be out here. My stop, I should say. So getting in would be in here for me. And my ETH low is about 82.5, which just disappeared. So it's over here someplace. And then I see this. So right here, I see this, and this seems a little out of sorts to me. I said, wow, that's really pretty aggressive, because often what happens is you're going to get one of these deals, Now, my opening swing high is right here. And quite often what happens, and this is something I talk about in Trader Lab, is I call it a stop pick. You have your opening swing high, your opening swing low, and often what happens is we can come up, take these sellers out, and this is all opening trade. So opening trade is its own animal, its own separate plan. It is not another walk in the park. And I always say in Trader Lab, you isolate the open and you build out a plan for the open, but it is not where you start. And if you're compelled, and I use the word compelled with quotes on it, which means compulsion. If you're compelled to trade the open without a vetted trade plan, then you're sitting in the casino. Be sure to ask for the cocktails. So right here, I have my opening swing high. So what I'm anticipating here is a pick, stops, right in here, and then a potential retracement mean reversion. And instead, I get this. And I'm going, whoa, you know, in this. So right here, I get this, and I'm going, something, as they say, is happening here, and it's not in alignment. So the market runs away from me. Okay, now, when this happens, I don't have a trade. I'm going, you know, and that's basic. You know, you get your jaw off the keyboard, and then you got to make an adjustment. So my thing is, if this, then that, and then out here, back here, instead blow up, and I see that. So this shows me there's a higher time frame participant in here, and we go from there. So overnight VPOC. Remember what my plan was. My plan was, because of the statistics, was to go for the ETH low and then turn it around. Now there's a couple possibilities. Turn around, stop pick, come for the ETH low. So that was still on my radar here until that. Once I see this, I'm going, as they say, whoa, Nelly, and this is the target. But I did not get long. There was no way for me to get long in this configuration here. So now I'm going, well, that's nice. Now what? Got to find a way in. Now, what's a way in? If we have a higher time frame participant, which is what this is, then there's only one way for me, and that's called mean reversion. Mean reversion is looking for a counter rotation, which the market will eventually do, and then use that counter rotation to revert back to a high volume area. So the way that tends to work is the market gets to a location, it counter rotates, for example, like out here as an example, and then you're going to do one of these things, outside in. So I have to wait for that. And what now? This is called VPOC migration. What this is saying, language, is that this volume here, which was the retail price, is too low. The market left it, so there's no real volume in here. By that, I mean, of course, there's volume, but it hasn't paused. We need the pause, and the pause creates a consolidation and volume, because now the market is hanging out somewhere, and the volume is higher here than down here. Logical. So I call that a variable high volume node. So I'm going to label it. And this is a process I do every day here in the stream. I follow process because the market is random in the sense of where, when, how. So let's look. So right here, now in TraderLab, we have a structured trade. And there's two ways to do this. One is in a trending move, and I'm going to assume that we have a trend configuration. The first target was this. So when I come to targets, anything of course can happen. So, you know, let's just keep that in mind. If this is the retail price in the ETH, overnight volume point of control, and what was our statistical probability? I know you write these things down, and they're all available in TraderLab. You have to vet them for yourself. It's about an 83% probability. Now, given the behavior, this is not, it was my target. If I was able to get long, no long, as they say, no bueno. So, target, reaction. Now, here's the possibilities. It's the end of the move, which it's not because it's a trend configuration, or we get profit taking here for those who are able to get long, not me, and then out here. So we can get the VPOC migration, push off, or rotate and do mean reversion and continue up. Those are the possibilities in this scenario. So for me, there's no shorts. All there is, because it's a trend configuration, is longs. And again, the only way to get in, for me, is outside in, not. But this is an aggressive trade. So VPOC migration is a TraderLab structured trade, But you have to understand what happened here, because we might rotate deeper out of here and nobody knows. So, but let's look over here. So what's out here? This is a micro consolidation. Buyers are rabid. You can see the drool on your keyboard. Support. Aggressors. Now here, because overnight volume point of control is the potential for the rotation, there's some selling. That's profit taking. Now, is it the high of the day? Who knows? For me, not yet, because I'm not any good at picking highs and lows, and many retail traders are going to go through this "it can't go any higher" thing. Well, after you've been doing this for a while, you figure out, yeah, it can. So our job is not to say it's too high now. Our job is to know where our trades might show up and to then participate if we get our setup. And then either it works or you take a stop and, life in the fast lane. What I know is out here is too low. So VPOC migration, this sets up a long. Your long entry would be here or here if you're aggressive, and your stop needs to be outside. Now, if it doesn't fit your trade plan, you don't have a trade. Let's see what it does. So if you get long here, you'd be risk neutral. If you chased it, you may or may not. Now, what I tend to do is wherever my stop needs to go and my entry, whatever the range is, I need to use that range to get risk neutral. So the worst that happens is if I get taken out, well, here's the thing. If I don't get risk neutral, I'll take a full stop. Welcome to trading. If I get risk neutral, I'll scratch the trade. My broker sends me a gift basket and I wait for the next trade, because here's the possibilities. This, keep going, or this in rotation. That's the possibilities. After that, no clue. And where's my support? It's out here. Let's see what happens. So if you took this, you would scratch. Your support is out here. It's an outside edge. And what is the process in a trending configuration? Mean reversion. This is now the mean. So mean reversion is outside in trading. Okay, this is aggressive. And the problem is, I saw it and I thought about it and I said, well, it doesn't matter. Everything's a problem because it's uncertain, is this. That's why the rotation. But you don't know whether it's just going to keep going or we can rotate off it. So that's part of the thrill of randomness. So mean reversion. So if you took this, you would scratch the trade or take a stop, depending where your stop would be. Support is this. No way to know. Outside, liquidity comes in here. Mean reversion. This sets up a trigger. This is your support here. Oh joy, right? Now what? Overnight mid. Let's go to the next statistic. So for me, not being clairvoyant yet, these are the first trades. And I want you to know I'm not able to trade from here. So what I'm showing you is this is my trade plan. So this is what I'd be doing. It doesn't matter. So if I didn't get it, if I entered poorly, I'd take a stop here. I would also re-enter right here. And I'm going for the next probability, overnight mid. Just the way it is. I'm sure other traders in Trader Lab were more timely. It's just the way it worked for me, or would work for me. 83% probability to go here. In a trend configuration, all bets are off in the sense of it's just a statistic. So the scale for me on this trade would be here. And then I'm going to look higher up for next targets. This one has about a 70% probability. Next target. Let's keep going here. Now, let me get some more statistics out here. taking out the first hour's high, remember, taking out either the first hour's high or low is about a 97% probability. Well, given that we're in the trend configuration, I would suspect we're going to take out the first hour's high, which is this. Also, there's about an 85% probability we take out yesterday's high or low. I'm still thinking yesterday's high, and it doesn't mean it'll ever do it. Not our job. So let's look. Next target, and then this. Let's just see how we might do this. And this is a pretty, you might say, a really strong move, you know. VPOC migration. Does this look familiar? Well, what do we get here? Chop, volume, variable high volume node. Let me mark this one up here. Variable high volume node. Now, one of the things about a trend configuration, there are not a lot of entries in this because it's running. So the only way I find for me that I operate in these is I try to get outside for what's called reversion trading. So I need the counter rotation to try to get back in alignment. So that's just me, you know, that's my thing. It's the way, because I don't chase the market. I am very patient. It doesn't matter to me. I want to be here for tomorrow, you know, and, you know, some days in the Trader Lab, there are a lot of trades subject to the rotational nature. In a trend configuration, you're not getting a lot of rotation. What you're getting is just shallow pullbacks. So the shallow pullback is what creates the mean reversion. This is a mean reversion trade right here. Let me show you. And they're pretty interesting because it's a specific plan in a plan. So if you have a trend configuration, it's only longs for me. Not saying you can't be a counter trend trader. I'm going to say maybe not such a good idea. What happened here? Sellers took a shot here. Look at the aggressive buyers. This is a micro high volume structure. I'm going to label it for you so you can kind of see it. How's the audio and stream doing, guys, by the way? We doing okay? Please give a like. If you're in YouTube, remember, if we have a problem with the stream, I will have to drop out of YouTube, but it will be posted up in YouTube world after the fact. This is support. Break high. Pullback to where the buyers took over. Now, this is microstructure. It's right here. I'm going to draw you another little box. I just want you to understand when you're looking at this and your jaw is sitting on the keyboard because you're going, how do I get in it? And FOMO is rampant. By the way, when I see the market run away like it did, I have the same feelings you do. But here's what I have found. I'm going to just share a little thing. When the voice in your head says, I've got to get in, I've added a little something to that. It's, I've got to get in, but I have to wait for my next trade. Where is it? How does it manifest itself? So I've added on a piece to the thought. The thought is coming from Hyde. Hyde, you know, Jekyll and Hyde. Hyde's the lunatic. Well, I have to get in is what causes FOMO. So I feel the FOMO because that's such emotional triggering, but I know what to do about it as opposed to just having that thought process cut off my intellect and my intentionality, and I become a raving lunatic in the moment. Chasing. So I feel FOMO, but I know the solution to FOMO. The solution to FOMO is the trade, and I have to wait for it. So I've added that piece after many years of throwing dollars out the window. How about you? So volume is here. Sellers took a shot here. Now here's what else you need to know. Stops are going to be here. So if I get a trigger, how can I enter this trade? I can enter it there with a limit order, 1 tick above here, stop 3 ticks under there, and, you know, go wherever. Manage the trade or not. Now let's come back here. What is this? VPOC migration. What are the possibilities? North or, I know you're going to like this, south. But if I get the rotation down, does this look familiar to the last time? What is this called? Mean reversion. It's the only way I can participate in this thing. Now, for me, this is a difficult scenario because I'm out in thin air. So this one is really for someone who's much more advanced. But this, now I have the volume point of control. The highest volume for the day at the time is right here. So if I pull back into support, now here's another piece. Put this in your trade plan if you don't have it. Where's the stops? There. So if I get the rotation, I have to look left. Put this in your plan. Look left. Where are the longs potentially trailing their stops? Well, under here, under there, under here, and under here. But where's the last place? Right here and here. So I know stops will be under here. And I sometimes get the question, how do you know? I'm going to say is, where would you put your stop? And there's the answer. It's here. It's my stop. If I was thinking like a retail trader and I'm risk adverse, it would be either here, here, maybe there. You see, I'd just be following it up. I don't do that. Now, I'm not saying you shouldn't do it. I'm saying I don't do it. And the reason I don't do it is I anticipate retail trader behavior, having been one. Now with you guys, after managing dollars, I joined the retail ranks, but I understood retail trader behavior. It's an advantage if you can think like a retail trader, but not act like one, because it's kind of lemmings. Everybody does the same thing because retail traders do not have any kind of staying power. They're really the weak minnows. We're trying to swim with the whales and the sharks. So, support. VPOC migration, mean reversion, long to there, and then going north of the border. And we have the IB stack coming up, which is the first hour's high, wherever that's going to be. And that comes in around 9:30 Central Time. So let's watch. So this is a good long. That's mean reversion to there, and then you put your helmet on. So far, so good. Okay. Now we come up here, and this becomes our first hour high. And remember, there's over 90% probability we take out either the first hour's high or low. Given it's a trend configuration, I'm going for the high. How about you? So let's look. First hour's high, high probability. And so for me, there weren't a lot of longs here, And again, on a trend day, I don't get a lot of trades. I just don't. Because I need a counter rotation. I do not chase the market, and I don't care. I don't care because I know there's going to be other trades, other days. It's just another day, another walk in the park. Except the adrenaline is flowing, the FOMO is triggered, and here's what happens to us. A couple things. One is when the market runs like this, and you miss it, you are thinking you want to get it. I missed it. I want to get some. It's kind of like the market owes you. Market doesn't owe you anything, The key to this business is a trade plan and just following it. It's not more complicated than that. It's not about catching the big move. You'll catch your share of big moves, and you'll also take your share of stops. That's trading. So let's look. So this is the IB high, first hour's high. It sets at 9:30 Central Time. Okay? So if I know this and I'm in a ripping market, then I want to use any counter rotations to get long for this statistical probability, which is over 90%. Is that logical to you? Think about it. If you have a probability and you're in the market where there's a lot of drool going in, of everybody going, oh my God, I missed it, let's get it. If you get a counter rotation, it sets up this statistic. So that's why if you're that long, you can look to get long. Now let's come back here and look at some structure. The volume point of control is over here. This was our last long. So everything is on cruise control here, you know. And at the time, I'm looking at this and I'm thinking, yesterday's high, 85% probability. So I just sort of go, okay, yeah, and manage the trade. If I get taken out of my trades, which I do, I just put them back on again. I just do whatever. It's not my job to know what will happen. Haven't figured that out yet. Now let's look right here. Now, there's a couple ways to think about this. High volume, high volume, high volume. You can see it. High volume, high volume, high volume. These little nodes like this are consolidations in a shorter or microstructure. So this is resistance. That's resistance. Or call it, yeah, resistance, support, support, support. And where's my last consolidation? It's right here. So this one is important. Now let's get inside this thing. Take a look at it. Because let's look at this. If this is too high, and there's no way to know, part of the thrill, this is going to be resistance. I'm just going to mark it so we have it. So we have the volume in here, and right here you see the sellers, right? So if I see my sellers here, as far as I know, it's going to do whatever. So my trailing stop has to be below this. It's got to be under here. So if I get long, and what I do in a trending configuration, which is a different plan for me, I am shooting for higher probability targets that are out in the ozone. So this one is my next target. So the IB high is set at 9:30 Central Time. It's the first hour's high, and then that probability is over 90%. Past performance not indicative of future results. Let's take a look at this. So there's two ways to do this. One is out here. Try that again. Just want to box these things out so you could see them. And what I'm doing is I'm bracketing the consolidation. So there's the outside edge, low volume node, and here's the low volume node out here. So look at it this way. So it goes rotation, rotation, high volume. Think of the high volume like a retail price in here. And if I leave it, it is then too low. So then my support in this thing is there and there, because the sellers were here. The sellers are there. There's your sellers. The buyers are here. And why didn't the market go down here? Because they were absorbed, which you don't know until we cross back above here. And these guys are under the bus, the sellers, which is not unreasonable considering a trending configuration. So we break high. Now we have a trigger. So what do you do with this? Well, we have the IB stat at 9:30, 90% probability, this thing. So if I rotate down, I have two places to enter. Here with a stop under here, or here against the volume, right there, with a stop under here. Or, if you feel lucky, as Dirty Harry says, an entry here, and then I'm going to show you something a little different here. And the reason is because right here, the buyers took over. So if and this is more aggressive and you have to vet this. And this for me, and it's not a recommendation, is only because it's a trend configuration. If it's just a typical rotational day, two-sided trade, no bueno. So again, this is more refinement. So this is your long, and you're going for this. It's another structured trade in the Trader Lab. Okay, now up here, now no way to know where the high of the day is. So I'm going to tell you, I wish I knew. I've stopped working on that. There are some traders who claim to know the low and the high. We see them from time to time, even in TraderLab, and of course it's nonsense. And we all fall over the high and the low. Unfortunately for me, back in my development, I would kind of buy the high. I certainly never sold the high. How can you sell the high? Unless you have a limit order at the high of the day and they fill you, which is also highly unlikely. Please give a like, by the way, if you're in YouTube. So let's watch. So right here, no clue. By the way, this is the target, by the way. So for me, I have no clue. So I'm just telling you. And remember, I'm really narrating my trades, not yours. These are trades. If I was able to trade from here, I'm in an unstable environment. I cannot trade here because I get data lag or just stops. You know, very nice. Add that other dimension of nausea to trading. So let's watch this. Where's our support? Still here. Now, I haven't seen this, so I don't know what's going on. Let's see. Notice how the market behaves. These sellers were absorbed, okay? I come down to support. I get VPOC migration. You guys remember VPOC migration. Now, let's talk about the language of the market for a moment. The language of the market is trying to find a fair price. What does it say? So that's what it's doing. And the volume point of control represents the highest volume. So think shopping. If the market's going up and this is moving higher, it is suggesting at the moment, remember, this is dynamic, so it changes, that this is the new retail price. It's the same as when you go shopping. If it's if the price is too low down here, and now the S&P buyers are willing to pay this as a new retail price, that might mean this is too low. So then I get the VPOC migration. What can I do? Well, I know this, which is where the sellers were absorbed last time. Here's a concept for you. I just want you to make a little note of this. If the buyers were active here and they thought this was a heck of a deal, is it possible, if we come back, that those same buyers who absorb those sellers may activate at the same place? It's like, oh yeah, you're going to put it on sale again? Here, let me throw 3 in the cart. Buyers, sellers are here. They test the buyers. Right here, we're above. Right here, we're above. So your entry could be here and your stop would still go under here. And then what you're trying to do is you're going there. Who knows? VPOC migration, going to the moon, Alice. Watch. Then what happens? Bingo. High of the day currently. Any way to know? Nope. So what happens here? You have a long here. You have resistance sitting right there. Pull back here, support, and you're trying to come back here. So if you got long on this one, you would take a stop, unless you're able to get scaled, which you might. I really don't know what you would do, and I might take a stop also. I couldn't tell you because I don't know where I would get it. And then I'd go, well, that's nice. And then I've still got my 85% probability, and then that's about it. So now, what do we do with this thing? There's another way to get into this. The volume point of control is up here. The market is long, and there's stops below us. So I have to look outside. This was too high. That's this right here. No way to know. Don't you wish? Not me, not so much. Micro high volume structure. Outside edge is here, so it's kind of like you're looking for this kind of thing. If I fall out of this, then it sets up to come back here. And if I cut under there, it sets up to come out here somewhere. Again, somewhere. part of the thrill. So this would set up something called mean reversion. And it's an outside edge trade. So, and this is hard. What's hard about mean reversion is how far out does it go? So we need to take a look left. Write this down. When you're trading mean reversion, you got to look left. So where's the stops? Under here, under here, under here, under here. And where's our support? Maybe down here. VWAP. Now we have a structured trade in TraderLab called VWAP to VPOC. That's a structured trade. So for me, the next area long back against this right here is a long to there. That's a structured trade. Let's see what it does. Okay, well, that's nice. So that is here. And that's called VWAP to VPOC, structured trade. And what do you notice? VWAP alignment. Is everybody tracking? This is a long to there. Structured trade. And I'm okay with that. So that's the next trade I'd be taking here, because once I fall out, then the only way I have to get into this thing is either out here or out here. And I don't know which one. You know, it's part of the thrill. Are you guys tracking? No, there's RP, there's nothing mechanical about VWAP to VPOC. I take it because, first of all, we're in a trending configuration. I have an 85% probability of taking out yesterday's high, and that doesn't mean we will. It's just one of those things. And it's a statistic. And if the trend is up, there's going to be other traders, including me, who miss the move. And I know that retail trader behavior is buy the VWAP, buy the mid. You know, it's almost like lemmings. But what's important, and most retail traders don't consider, is context. Context is up. So for me, yes, it's a qualified trade. Mechanical, no. I'm just clarifying, no. So this is long. And remember what else is here? Support. So it isn't just that there's a line on a chart. That, to me, is a recipe for a problem. For me, it's where's the stops here and under these swings. Everybody trailing is getting thrown under the bus. Fine. And then where's my support? But where's my alignment? It's here to there. So this is a long from there to there. And then looking for the high. Okay? Today's high and yesterday's high. So that's the plan. But what would happen here is you get to here, you get risk neutral, and then you're going for this. Or you get long, you trail, and you're going for this. However you want to do it, it's subject to plan. And then the idea is right here, we need to continue, and we don't. So, magic. The magic of trading. Then what? We pull back here again. Now, there's another piece here I want to point out to you. This is called sell sweep, okay? And I've been reviewing this in TraderLab quite a bit, but you guys can watch a lot of the other streams I've done. They're up on YouTube, and there's also a library of webinars in the Bookmap Discard TraderLab community, as well as 60 PDFs of these structured trades that you can download and reverse engineer. And there's no cost for this. They look like this. You know, these are actual trades, and some are experimental things. I was working with Bookmap developers a number of years ago on ideas, things, and some get thrown out the window, some are incorporated. But these are available. There's a link in the bottom of YouTube if you're inclined, and the library of webinars. And don't forget the TraderLab community, which is a group of like-minded traders who have come together, and it's all about the business of trading. And learning the business. It's not about the latest thing or the holy grail. It doesn't exist, in my opinion. So this is your retail price. Now, if it's too high, which at the time, no clue, we'll bounce off it. Now this, we pull back again to the VWAP. Now, I don't take the same trade twice, and here's why. What's under here? Stops. So me, not so much. I just go, well, that was nice. Why didn't we keep going? Well, buy sweep. What's down here? Sell sweep, supports the long. Buy sweep. That's the warning Will Robinson moment. And again, I don't have any clue. Look what's up here. Buy sweep. Sell sweep, upside rotation. Buy sweep, downside rotation. Down. Sell sweeps, looking for a long. No location. Location, location, location. Long. Going to the moon, Alice. Uh-oh. Target, buy sweep. Pullback needs to clear that right there. That's your developing volume point of control. And why is it important? Because that's the current highest volume for the day, and it's a retail price. Think shopping. Well, if this price becomes too high, which there's no way to know, just there's nothing you can do about it except manage your trade per your plan. And now I come back here. Right here, we're looking for this. What do we get? Hasta la vista. Come back here. Sweep. Remember, sweep up, sweep down, sweep up, sweep down. Now, it's not an indicator per se. In other words, buy this, sell that. This is not how order flow works. What it is I'm seeing a sweep, and then I have to determine what's the next behavior. Well, I know if I have a sweep here, I can get that. And if I have a sweep here, I can get that. And doesn't have to do it, by the way. For example, we have a sweep here. Why didn't it go up? So don't think about this as indicator 101. If trading was that simple, we'd all have ATMs in the basement. Sell sweep, rotate up. Big buy sweep, rotate down, and I don't take the same trade twice. Me, just saying. Now this is a full session VWAP. Let's just see what it does here. Now, the next idea in this is this and an outside edge out in here, low volume area. It's going to be out in here. So if I find a place to get long, then I'm going to be looking out in this area, and it's still going to be mean reversion. So unless it's broke, and who knows, we won't know until we know, hindsight, it's longs. So let's look. Oh, well, I guess not. So we get a sweep here, full session VWAP, and this is the area for looking for long. And it's not a trade recommendation. So we'll see what it does. We've got our mid sitting over here. There's going to be stops at the mid, and also liquidity resting right in front of the mid. Now, for me, when I see liquidity in the mid, I anticipate a rotation, but also a possibility of a trap. And again, that doesn't mean anything, only in the sense of I'm always thinking in possibilities from both sides. So buying the mid for me is, it's just personal, again, not a recommendation. My least favorite trade, because retail trader behavior, they're mechanical. So we want to watch in here. There's a sweep, right? So let's look at some pieces. And I find for me, if I get a rotation here, I'm okay if I don't take any trade here. And I'm not saying you shouldn't. I'm just talking about me. Too many times over too many years, I would think, oh, it's the mid. Well, everybody else does too. What's under the mid? Stops. So I got sell stops here. I've got a sweep. And if I get mid buyers, I can get a rotation and then FOMO, right? Well, remember what's important. This and out here. So let's see what it does. You guys have questions in the meantime? We're waiting on this thing. Because right here is a sweep that suggests the rotation. And it could be the trade of the century to come all the way back here. Or we get a move and then we break under for stops. And then I become interested. And that's just a personal thing. It's not anything more than that. So if this trade is the trade and it goes without me, I'm perfectly okay with it. I have all day. That's just, again, that's just my personal thing. And it's based on some experience, that's all. So there's your sweep. So that sets us up, but here's the sweep here. So just, we can't get too carried away just because we see something. So there's your sweep, but we have a sweep this way, which suggests maybe this. So we'll just see what it does, okay? Questions? Please give a like. How do I determine the trend to follow, Roy? Well, Roy, the trend is up because of the aggressors. And we failed to get down below yesterday's low. So it's kind of what did we do? What did we not do? When you get that kind of aggressive move, that is typically a higher time frame participant. So if we get that, let's watch this here, okay? If we get that kind of buying, it is outsized rotations. That rotation was like a bullet train. Well, that doesn't come from us. We cannot move the market like that. That suggests higher time frame participants. And the idea is the higher time frame is the desks, the banks, the hedge funds, more sophisticated traders than us. Okay? So if we see a rotation or lack of rotation, just a directional move, it's called an impulsive move. It's outside the normal harmonic. And in the S&P or ES, it's like maybe 5 points-ish, 6 rotations. Notice nada. So nothing to do here. So for me, I don't have any trades here. I don't have a trade here, that's for sure. And now I'm under the mid. So nada. So now, this is like trying to catch a falling knife, you know. So we will sit and wait. So now the stops are coming out. So you had 364 here, 298, and we have buying icebergs here. So the fact there's an iceberg is not a reason to do anything, but we want to watch. If we get along, we have to be, now here's the thing about this. Where's the outside edge? This becomes extremely tricky because they all look the same. You know, is it here? Here's our mid, don't forget. Our stops are under the mid. Now we want to see what happens in here. So we have sell stops still coming out, sell stops coming out, buy icebergs are accumulating the stops. So we want to be watching out in here. But this is very tricky. I find mean reversion is mean. It's very difficult to know, because you can't, where's an outside edge. And this is something I think is pretty important for developing traders. Your job is not to keep trying to catch this thing going, oh, do I buy it here? Do I buy it here? And then you take potentially a good day and turn it into trash. Your job is to just wait for your trades. If you don't have a trade, you just sit, you know. We're not here for action. Remember, we're here to take intelligent risk. So let's watch this behavior right here. We got a buy sweep here. So we want to watch this behavior right in here. Microstructure. See, the problem we have is we're now under this edge here. This is a low volume area. So we fell out of this distribution. And this is the kind of the border between this outside edge and coming down here. So nothing to do. Let's just sit and watch. You guys have questions in the meantime. Please give a like. Roy, I hope I answered your question. Well, Espen, I do identify the name of the trades. The VWAP to VPOC is a structured trade. VPOC migration is a structured trade. And then mean reversion is outside in. That's primarily what we're working with here. I mean, there's 60 PDFs of structured trades. So it's better, I think, if you download them and come to the Trader Lab, because this is a dynamic process. Now, remember, outside edge is in here. And again, no trade. We're not trying to catch all these rotations. We're trying to wait for locations that give us a statistical edge. This doesn't matter. If this is the trade of the century and we take out the high of the day. Emotionally, it matters because we're going to have a feeling, oh, I should have bought this. Well, not if it's not vetted and not in anyone's plan, then there's no trade. But remember how the casinos operate. And we're really in a environment that's a gaming environment. And they only play games that have a statistical edge. They don't make them up. They don't change them. They don't skip the next hand. They just deal the cards. They understand they're going to be playing the gamblers, but they don't make games up because they're sitting here or they get bored. Now this, from a structural point of view, says potential rotation, but it doesn't say it's a trade. It just says it's a rotation. There's nothing to do. And if you guys are interested in the Trader Lab and the process and structured trading, trading with a plan, understanding that this is a business that's built on statistical edge, probabilities, not predictability, then you'll understand how casinos operate. That we're in the gaming business, same as them. So what's a proven business model? Have you ever thought that trading is already, the business model already exists, except most of us are hung up on confirmation and certainty? How can a casino operate in an environment of 100% uncertainty? Retail traders, and including me early on when I started out, are looking for confirmation and certainty. When I first was learning trading, I took a course at the CME in classical bar charting. We didn't have indicators. They were like a new idea, Wells Wilder and all that back in 1980. So I learned measured moves. So inadvertently, I learned that a measured move is a prediction. So I built everything around doing that better. And then when indicators started coming in, I started reverse engineering indicators to understand how they worked so I could put them together and create more certainty. So more time frames, more indicators, pile it on. And if that's what you're doing, I'm going to suggest take a shortcut, don't bother. Just a personal opinion. Because that's not the answer. That's actually the problem. Because we all have winning trades if we had nothing. So when we have winning trades, our logic says, well, just make it better. And how many years do you want to spend doing that? I spend too many years trying to do it. Because every time you have winning trades, you think it's just, well, maybe a little tweak, a little tune, throw a little salt and pepper in there, and make it better. That's logic. However, that's not the way it works, in my opinion. And why do we know that? Because that's now not how casinos operate, and they are the ultimate example of how to operate in a completely random environment. Casinos only control how they play the game. They don't control the outcome of the cards coming out of the deck or how gamblers play. And it's really important you understand this, because if they could have figured it out, they would have. And what they figured out is they can't predict. So why are we trying to predict the outcome of the next trade if the casinos can't predict the outcome of the next hand? So maybe we're trying to solve for the wrong thing. Maybe we need to solve for being in a 100% random environment and not try to solve for certainty. Most retail traders spend their time and maybe dollars looking for certainty. And unfortunately, if you accepted that there is no certainty, you would then reconfigure your objectives to operating in uncertainty. Just a thought. And if that's you, come to Trader Lab, because I did a webinar on something called Trader Groundhog Day. Working hard, waking up in the same place. And it's all based on my experience, because I'm the same as you. The only difference is I've done it for 45 years, and I also was on the professional side of the business. But when I started out, I went through the same things you do. And for me, it was a lot harder. There was no information. You guys are at the opposite. You got so much information, you don't know if you're coming or going. So, I would not say more information is better, because you can spend your limited amount of time and resources chasing illusions and ghosts and influencers who are generally clueless, with exceptions, I'm sure. That's why Trader Lab was created. You can work with a group of like-minded traders or senior traders over 50 years experience. I've got 45, and we have everything in between. And it is not about a methodology. It's about coming together to leverage the collective experience of the traders in the community. Everybody shares, what are you doing? Oh, why'd you do that? I don't know, oh, this is this. Look at this statistic. There's a lot of effort goes on in Trader Lab. It takes a community, data mining, statistical probabilities, the things you hear me discuss here in the stream. It is a community. There's too much work to do. And as traders, we tend to exist under a rock. This is a very isolated business. You need to be in a community. And I will tell you, the Trader Lab's for serious traders. It's not romper room. Also, it's an advanced process. What you're seeing me do here every day in the stream is not, it is advanced because I don't use any indicators. So how can I do this? And believe me, there are times I ask myself, how can I do it? Because I've removed the indicators and I've learned to speak what you would consider a foreign language. If you can speak the language, and this is where order flow and a high tier tool like Bookmap comes in, and you can understand market mechanics, how it works, then you can overlay the microstructure and you can see the auction down to any micro level you want. Right here is an auction, too high, too low, triggering structure. I'm just pulling this out of air. And what's here? Micro high volume. Test, too high, south. What's this? Chop, chop, chop. Break high. Structure, trigger. High volume is right in there. I'm just taking you down in the fractal. I'm not saying these are trades. I'm just saying this is how you read. And then what? To here. Then where's resistance? It was up here. Now, this is not tradable for me because I don't trade this. I don't trade in here at a non-location. So you need to understand, where are we? We're on the outside. How do we know where the outside edge is? We don't. So I'm not going to be trading this. I have to have more. More means a more structured environment for me. So nothing to do. Now, if you're a short-term rotational trader and you've developed the skills and the edge for that, of course, because we're in the business of statistics. Remember, probabilities. Casinos are in the business of probabilities. If you don't have a statistical edge, then you don't have a trade. You're a tourist. Is that hard for you to do? Then that's FOMO. Or do you already know where your trade might show up? Because the idea of Trader Lab is you're not making it up. You're anticipating the locations, and then you're looking for triggers, and you have to have the structure in place that gives you a statistical edge. If you don't have that, you don't have a trade. You're just waiting for your bus. If you feel compelled to do something because you're sitting here and you see rotations, and in your mind, you're going to go, gee, I could have taken that. How about, are you thinking you could have taken this and taken a stop? Are you taking, what are you thinking? You could have taken this. You could have taken this. You could have taken this. Boom. How do you know to get long? Should you be getting short? Should you be getting short here? Oh, should you be getting long? You see what I'm saying? Your mind is going to focus on what you could have done, which has nothing to do with what you can do, will do, or has an edge. And your mind is selective about what it sees. You need to understand your psychology and the tricks that your brain, or I actually should say Hyde, is going to play on you. Hyde, who's the FOMO artist, is only going to see the rotations that work in your favor. And the ones that you go, gee, I should have, and then it does this, you're just going to go, okay, I wouldn't have taken that one, right? Does that sound familiar? This is the way the mind works. So you got to learn about yourself. You can learn about yourself in Trader Lab. I mean, the Trader Lab is a unique community. It's like-minded traders who've come together, and the idea is to leverage the collective experience of this group. And there's no cost for it. And it's available to all of you in the Bookmap Discord Trader Lab community is open. There's no cost. And as long as it's available, if you want to be in a professional community, as I say, it's serious, and it's traders helping traders to develop. It's Sharing of trade plans. Do you have a trade plan, or you're just making it up? The business of trading is not a video game. It is not. And if you approach it that way, I can't guarantee it, but I can give you a strong assurance you won't be doing this. You'll become a statistic. And most of the retail traders, we always read about, the high failure rate for retail traders. Why is it high? Because they all do the same thing, and they don't have control, and they don't understand this is a gaming business, and that you don't make games up. And the casinos don't get bored and say, well, you know what, we just paid out on the last hand. Let's change the game to something else. They just pay the gamblers because they know they have to pay the gamblers in order to extract the edge and extract the dollars over time in a random distribution of outcomes from those gamblers. Well, if we're in the same business, we need to have a similar perspective. And that is, we are going to pay the other side. All businesses have overhead and cost of production. Tell me a business that doesn't, then we'll go into business, so we're going to pay. And if we have an edge that we vetted, then our job is to just wait for the trades that have the edge and accept the random outcome. The other thing is, how do you manage that psychology? The lunatic under the hood, Hyde, Jekyll and Hyde. Hyde's the lunatic. Jekyll is the professional, Dr. Jekyll, intentional, professional, logical. Well, the lunatic is there. So how do you get control of the lunatic? The lunatic's always speaking in your ear, right? You shoulda. Why didn't you? You coulda. Let me get in. Sound familiar? That's Hyde. So if Hyde is always present, and it is, and that's wired into us, so you can't get rid of Hyde. Now you got to learn to understand Hyde. How do you control Hyde? Here's the answer. Statistics. Tangibility. A statistic you can touch. You can see it. If you have a statistic, it gives you a device or mechanism to manage the emotional stimulus. When you have nothing tangible, no statistic, all you have is emotional stimulus. And that means that's it. So now you're going to not be able to manage yourself because those emotions are so strong. You have no management for Hyde. That'll take you out of the business, as it does most retail traders. So how do you overcome the problem? You come to Trader Lab if you're interested. Doesn't mean you'll be a successful trader, but my personal belief is I can teach anyone how to trade. I've done it over and over and over many, many years. But not everybody will succeed. Doesn't matter what you do is one part. And the other part is most retail traders are too much in a hurry to feed Hyde. FOMO. Click the mouse. Get the dopamine fix. Oh, the adrenaline. I want it now. And they don't do the work. They will not be in the business. Most likely. You got to do the work. So the work is not done here. The work is done outside of market hours. And then you bring your work, your trade plan, your statistical probabilities to the market. And it only takes one structured trade that has a statistical edge to build out a template that you can build on. And that's the goal of Trader Lab. And most retail traders can't handle being patient and being intentional. And that's because of Hyde. FOMO. They're in a hurry. What are you in a hurry for? If you're going to build a career, you got to get educated. Why do you think it's any different here? You're competing against the best minds on the planet, and you're competing against other retail traders. Do you think you're just going to walk in and click the mouse and now you have the ATM in the basement? I'm going to say, wouldn't that be nice? But then it doesn't work that way. So if it doesn't work that way, then you got to look at your own experience and say, what am I doing? And is what I'm doing working? Now, you will have winning trades. Anybody can have a winning trade. So take that idea and put it on the shelf. We all have winning trades. If you had nothing, no chart, nothing, a button that was a random buy-sell generator, you didn't even know if you're going to buy or sell, you'd still have winning trades. What does that tell you? It tells you everybody can have a winning trade. So we chase the winning trade thinking we just have to make it better. But that is really not the answer. That's just more randomness, in my opinion. least that's my experience from it, because I did that. And of course, we all do it. The thing about it is, if something doesn't work, it might not be that you have to work harder, which is what we think logically. It might be that the process and your beliefs are not in alignment with the business you're attempting to be in. Because logically, we should be able to get the screwdriver out, tweak and tune, and make it better, logically. But statistically, it may have no edge and probably doesn't. Because even though you have winning trades, let's just say you're moving the ball in the wrong direction. You're not profitable. You do have winning streaks. You can have winning weeks and winning months, and you're still losing. You have to ask yourself why. And I'm going to suggest the reason is that you're not in alignment with the business you're trying to be in. You're in an alignment with the psychological needs of confirmation and being right, not with the business of randomness that you have no control over. I hope that makes sense. And if it makes sense to you and it sounds logical, I suggest you investigate further. If you're in YouTube and you're visiting, I appreciate you stopping by. Use the link in the bottom of YouTube. Visit the Trader Lab. There's no cost. All you need to do is confirm, come to Discord and confirm your username so we can keep the community free of spam and debris. And there's a lot of additional education available at no cost. Stocks, options, crypto, order flow with a high tier tool like Bookmap, algorithmic behavior, market maker behavior. I think I mentioned options and a lot more. And of course, the Trader Lab and other streamers that you might find interesting. And all of it's at no cost. So as long as it's at no cost, I'm going to say you might want to avail yourself of something that might help you on your journey. Please give a like, by the way. Appreciate you visiting here. I've got a little more time. Yeah, Cross, you've been trading since '97. You're almost an old timer. I started in 1980, and back then we only had what was called dumb terminals, and they were pretty dumb. There was no real-time. We had quote machine, but there was really nothing going on as far as technical analysis. It was all classical bar charting when I started. And then it's evolved slowly with Wells Wilder, which everybody knows about. So it was pretty exciting, If you wanted to place a trade, you had to pick up the phone and call your guy on the floor. That was about as deep as it got. And then I became a fund manager over time, took years, and then built trading systems and went on from there because I thought everything was indicator-based because, in fact, I shared an office with George Lane, which I know I mentioned from time to time, and he created stochastics. I thought that was the holy grail. And then I applied oscillators, to things like up volume, down volume, advancing, declining issue. I took indicators and really ran with them all over the place. Tick, trend, and all that because I was trading the large S&Ps and I was a swing trader and then a trend follower among many over asset classes. So that's kind of where I came from. And then once I retired from doing that, after doing it for like 10, almost 12 years, then I got into real retail trading, or I should say off-floor. I was not on the floor. I was one of the few people at the time who was an off-floor trader. Everybody was floor traders or forget it, or hedgers. No, a lot of it was hedging. I first came into business, but the interest was in hedging. It had nothing to do with being a speculator. Didn't even know what that was all about. So I'm just, not that it's important where I come from, but I had no clue. Never heard of futures. What's a future? And back then we didn't call them futures, it was commodities. Because it was a commodity-based business. So anyway, not important. A long time ago. So you see, there's no longs. So there's nothing here for me to do. So I have no trades now. Now, subject to your trade plan, if you want to trade the rotations coming the other way, that's your business. For me, I just sit back. I'm not compelled to trade. And I know a lot of traders want action. I'm sitting here, look at that. I could have made this. Remember who that is. That's Hyde. The business of trading is actually treating it like a business. Know where you have an edge, and don't get involved if you don't have a statistical edge. Just work on your crochet, go to the gym. I always like kid. We have a trader in Trader Lab called Rod, and he's made a lot of contributions, data mining and statistics, and everybody does in there. And he trades the larger swings, and he's done. He goes to the gym, or I don't know, man, he might take a nap. And then we have another trader in Trader Lab who's a good trader. He vacuums while he trades. Can you imagine that? I mean, he's actually posted a picture of himself vacuuming, and he's got positions on. I've never been able to master vacuuming and trading. I guess I got it. The wife says, why don't you work on that? It's a thought. Anyway, you guys have final questions, please post them. Please give a like. Ben is asking, would I only look for longs? No, I look for park. Nothing. I have no trades now, so I'm not looking for anything. So Ben, I have no trades. I'm in what looks like a liquidating market at this point. We failed to take out a high probability target. It doesn't mean we won't do it later in the day. Just like FOMC, once that was done, we squeezed out. We got aggressive buying this morning. Does that mean the market's going to go higher and take out that high probability target? I have no idea. Might we come all the way down and take out today's low and come back to a balance in the higher time frame at 56.70? Maybe. So remember, we're not in the business of predicting. We're in the business of what's going on. So yesterday's high, 70.5. That's our target. Looks like maybe not so much, but again, doesn't mean no. Yesterday's low is here. The 85% probability-ish, past performance not indicative of future results, is to take out yesterday's higher low. We don't have to do either. We can stay inside. I don't know. If we get under yesterday's low, it sets up 56.70. And if we get under here, it could potentially accelerate. I can't say it will, it won't. I just know what it might do. For me, we had aggressive buyers. I'm inclined to think that this low might be safe, and yet, so I'm still leaning this way because we had these aggressive buyers. And the market is not aggressive on the sell side. It is just drifting down. So no shorts for me. Long continuation trades if they come to a location that has an edge. And at the moment, because we're going into lunchtime, I could be done for the day. It just doesn't matter. So that's just me. By the way, this is Investor RT. It's my higher time frame solution. I've been using this. It's excellent for auction market theory, volume profile. It's got everything but the kitchen sink in it. And I've been using it, I think, since 2007 or 9. I can't remember. A lot of these things I can't remember because it's so long. But it's an excellent tool. But whatever you use, whether it's a software product, you always have to vet, make sure it meets your specific needs. The nice thing about Investor RT for me is it also exports levels. So it's doing all this automatically, and it updates in real time. So I don't have to be, I used to, click, 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 I'd be putting all these levels in. I don't need to do that. This is automatic also. High volume areas. Some of these I do manually, etc. Final questions. We got 5 minutes. Please give a like. Is it a bearish context? No, it is not, CVAN. It is a rotational context at the moment, and I have no trades. Now, to clarify no trades, I can trade this. But in the Trader Lab, it would be rather prudent to just be in park, unless you have an edge. So what this would be, for me, is I can isolate structure, for example, this to this kind of a thing, rotations. And if there's enough range, I treat this like mean reversion, outside in to the outside, back to here. If I fall out, then I'm doing this to this. But I have no trades. I just don't need to do it. If I can, let's just say, if I have an edge because I have range, but look at this range. My typical risk on a trade, average, I'm going to say, is 3 points or less per contract. I'm not going to risk 3 points to make 3 points or 4 or 5 points. If I'm going to put risk on, I'm going for much more than that. So I just am not here to keep busy. And that's just me. Everybody finds their own groove. There are some traders in Trader Lab who are going to trade this. Okay. But what you're going to find in Trader Lab, most traders in Trader Lab are not. Most traders in Trader Lab are going to be trying to get in alignment with the trend, and they have requirements in a trade plan for potential range and targeting, which are statistically based. So one could trade this, but I would not do it. And that's not a recommendation. It just doesn't make any sense from a risk reward point of view. So in a trade plan, you would put pieces together. You'd know where your trades are. You'd also know if you don't have a trade that you order lunch. Please give a like if you're in YouTube. Subscribe to the channel. Visit the Bookmap Discord Trader Lab community. Use the link down at the bottom. There's no cost. Download the 60 PDFs of these structured trades. You can reverse engineer them. Here's some order flow phenomena. This is an actual trade I had on. I was short, and I'm watching this bracketing algo. And you could learn this using an order flow tool. And right here, they pull. You see this? It's like, hey, what's going on? And they push. I hit the exit right there. That's my fill. And then the market exploded up. It's an interesting thing, but this is what order flow can do. If you're sitting here as the average retail trader, you have no clue what's going on here in the limit order book. So that's about edge, isn't it? And that's what it is about Trader Lab, helping you guys determine edge, where, how, and then it's always maybe. That's the Trader Lab, and you're all welcome to it. So you see no longs, no shorts, just park. Please give a like on the way out. Use the link in the bottom of YouTube. Smash the like button. It's the only way we can assure that the potential of this stream continuing and the Trader Lab continuing at no cost is that if you like it. It's the only way we know, since if there's no cost for this. Bookmap really doesn't have any way to determine if this is something that should continue. So that's why it's important you hit the like. Thanks again, guys. Thanks for visiting Trader Lab today. Remember, this link will be available to you in YouTube to review. Come to Trader Lab, download the 60 PDFs of structured trades, and there's a library of webinars that are available to all of you at no cost. This is what the Trader Lab looks like, and this is what the library of webinars is. It's all available to you at no cost. Thanks again, guys. Please hit the like on the way out, and thanks so much for visiting the Trader Lab today.